Now, friends, as we must have said, we'll want to look at an illustration so that to put what we have learned in practice, to look at the internal reconstruction well in an example. Now, our example, here it goes. I have a good example, and this is Omera Limited. Omera Limited, which has been posting trading losses, has decided to reorganize its capital. On 31st October 2007, a trial balance extracted from the books of the company after the income statement had been prepared shows the following. As you can see from the example you already have in soft copy there, I have mine here and says we have the trial balance, which is 6% cumulative preferential capital, 10 shillings per value, a total of 150 million. We have the ordinary share capital, 10 shillings per value, which brings a total of 200 million. We have the share premium, which brings to a total of 40 million. We have the accumulated losses, which brings to 140,375,000. We have the preliminary expenses, and that is 7,250,000. We have the goodwill, that is posting 55 million. We have the trade payables, which is 43,500,000. We have the trade receivables, friends, 31,200,000. There is bank overdraft, which is a total of 51 million. We have the leasehold property, the cost being 80 million, while the accumulated amortization being 30 million. We have plant and machinery, the cost is 210 million. We have accumulated depreciation, of which is 62,500,000. Inventory is 79,175. That's the trial balance. Friends, you need to remember, this is one of the questions from the past paper of CPA. Approval, additional information that is, approval of the court was obtained for a scheme of capital reduction, whose terms were as follows. 1, the par value of the preferential capital was to be reduced to 7.5 per share. 2, the par value of the owner shares was to be reduced to 1.25 per share. 3, 1 shilling 1.25 owner share was to be issued for each 10 shillings preference dividends in arrears. The preference dividend had not been paid for the past 3 financial years, financial year to 31st October 2007 inclusive. 4, the balance on the share premium account was to be utilized for the purpose of capital reduction. 5, the value of plant and machinery was to be written down to 75 million shillings. 6, the accumulated losses as well as goodwill were to be written off. 7, after the resolution authorizing the scheme of capital reduction had been passed, 5 million owner shares, 50 million owner shares were issued at par for cash, payable in full upon application. Assume all the transactions were completed on 31st October 2007. Required. A capital reduction account as at 31st October 2007. B, a member's account as at 31st October 2007. C, balance sheet as at 1st November 2007 after completion of all the transactions. First and foremost, friends, we want to look at the required. We want to know exactly what are we required to do. We are required, part A, to prepare a capital reduction account as at 31st October 2007. You need to remember this. A capital reduction account can also be referred to as a reconstruction account. A capital reduction account can also be referred to as a reconstruction account. Now, one thing you need to remember, that our capital reduction account will be debited with all amounts of assets written off. Will also be debited with the accumulated losses. Will also be debited with the preference dividends in arrears if they had not been recognized. Will also be debited with the scheme or reconstruction cost, friends. This capital reduction account will be credited with the amount of ownership capital written off. Will also be credited with the amount of liabilities written off. will also be credited with any gain on sale of an asset. If you sell an asset at a gain, then you need to credit your capital reduction. Or if you revalue an asset and you revalue and you have an increase in fair value, then that increase in evaluation will be recognized on the credit side of the capital reduction. Now, don't forget, friends, the balancing figure in this capital reduction account, if any, will be recognized as a capital reserve. Now, the second item we are required to deal with is a member's account as of 31st October 2007. Now, friends, you need to remember that the member's account is the shareholders' members account. We are talking about the ordinary share capital account. We are talking about the preference share capital account. That is what we mean when we say the members account. Then we also have the balance sheet. This is the statement of financial position as at 1st November 2007, immediately after reconstruction. We are going to see some assets may be reduced, some assets may have been written off, the share capital may have been reduced, some liabilities may have been reduced, and we are going to recognize the adjusted values of assets and liabilities, not only that, as well the share capital. Now, what we are going to do, we may want to analyze the illustration once again. We go back to the trial balance given. We'll want to analyze it one by one before we do the question. Now, from the trial balance, we have the 6% cumulative preference share capital. That is a total value of 150 million. If you calculate that one very well, you realize that if you take 150 million divided by 10 shillings per value, you'll be able to get the number of shares as 15 million. In the owner share capital, we have a total of 200 million. The par value per share is 10 shillings. If you take the 200 million divided by 10 shillings, that definitely, friends, will come to 20 million. Just simply, if you take your calculator, meaning you take 200 million, you divide it by 10 bob, you are going to have it as 20 million shares. If you also calculate the preference share capital, you take the 150 million, you divide it by 10 shillings, you are able to have 15 million shares. Okay, we also have the share premium. Share premium is a reserve. This is one of the items that will be used for the purpose of capital reduction. We are going to write it off for the purpose of reconstruction. We have accumulated losses, as we must have said, they must be written off. We are going to debit our capital reduction account with the accumulated losses. We also have the preliminary expenses. Preliminary expenses are going to be recognized in the statement of financial position. Unless otherwise we were told that they were written off, they will be recognized as non-current assets. We have the goodwill. Goodwill may also be written off. It depends from one company to another. One company on reconstruction, they may decide to write off the goodwill. So if that is the case, we debit our capital reduction account, we credit our goodwill. Then we have trade payables. If trade payables are reduced, we'll debit our trade payables account, we credit our capital reduction account with the amount of trade payables written off. We also have the trade receivables, friends, which is coming to a total of 31,200. If the trade receivables are going to reduce for any reason, we are going to debit the capital reduction, we credit our trade receivables. We have a bank overdraft. Bank overdraft will be adjusted if there is any cash we have received, maybe by issue of shares or something of that nature, then we are going to adjust the bank overdraft accordingly. We have the leasehold property. There is the cost and there is accumulated depreciation. The cost is 8 million, while the accumulated depreciation is 30 million. This makes it to be a net book value of 50 million. Simply, we have taken 80 million, you subtract the accumulated depreciation of 30 million, which brings a net book value of 50 million. we also have the plant and machinery, the cost of which being 210 million, while the accumulated depreciation comes to 62,500,000. For the purpose of determining the net book value, you take the cost of 210 million, you subtract the 62,500. We can do it here, friends. We are saying the 210 million, you subtract the 62,500, then in that case, we are getting 147,500 as the net book value for plant and machinery. We have the inventory of 79,175. From the trial balance in summary, if you're going to reduce the share capital, you'll have to debit the share capital account, you credit the capital reduction account. If you're going to reduce a liability, we are going to debit a liability account, you credit to a capital reduction account. If you're going to reduce the value of an asset, you're going to debit the capital reduction account, you credit the asset account. And the reduced value, friends, is what we are going to report in our statement of financial position immediately after reconstruction. Now thereafter, we look at the additional information, where we were told that the approval of the court had been obtained for a scheme of capital reduction whose terms were as follows. 1. The par value of the preference shares was to be reduced to 7.5 per share. Friends, if you reduce the share capital, we are going to debit our share capital account, we credit the capital reduction. We have reduced the preference share capital to 7.5 per share. This means originally we had a share capital per value per share was 10 shillings. If you're going to reduce it to 7.5 per share, then it simply means that we have reduced it by 2 shillings and 50 cents per share. How much will that come to? If you remember, our total number of shares was coming, our total number of preference shares, was coming to 15 million. We had 15 million shares. 15 million shares, you multiply that by 2.5. That's what we have lost. So we have lost a total cool amount of 37,500,000. Friends, this is the amount we have written off from the preferential capital. We'll simply debit our preferential capital, we'll credit our capital reduction account. Not only that, we are going to have number 2, where we have been told the par value of the ownership shares was to be reduced to 1.25. If you reduce your ownership capital from 10 shillings to 1.25, then it simply means that you must have reduced it by 8.75 shillings per share. How much have you written off? You take the 8 shillings and 75 cents, you multiply by the total number of ordinary shares. The total number of ordinary shares, if you remember very well, friends, was coming to 20 million. So we come and now calculate that by 20 million. We get a total of 175 million shares that will be written off. Then it means that from today henceforth, our ordinary share capital will not be at 10 shillings per share, but it will be at 1.25 per share. The next item, we have 1 shilling 1.25 ordinary share was to be issued for each 10 shillings preference dividends in arrears. The preference dividend had not been paid for the past 3 financial years. Financial year to 31st October 2007 inclusive. Now you need to remember, friends, very well, we are talking about dividends in arrears. And the dividends in arrears for the last 3 years, including the current year, had not been paid. So we must first determine the total dividends in arrears. How much will be our dividends in arrears? You take the dividends in arrears per year, you multiply for the 3 years. Let's go back to the trial balance, remember. In our trial balance, we had 6% cumulative preferential capital. This means that it will carry a fixed dividend of 6% per the par value. We now calculate that. I'll take the 6%, friends, I multiply that with 150 million, and I'm getting 9 million per annum. And therefore, to determine the dividends in arrears for 1 year, you take the coupon rate, which is 6%. It is 6%, friends. You multiply that by 150 million. You get 9 million per annum. And you multiply that by 3 years. That will come to 27 million. That is the total dividends in arrears for the 3 years. Now, friends, we have been told from additional information number 3 that these dividends in arrears that we have determined of 27 million will be paid. But they are not going to pay them in cash. They are going to issue shares to the preference shareholders for the dividends in arrears. On what basis? The basis is 1 share for every 10 shillings dividends in arrears. So we'll be able to calculate, and we're going to calculate that one later, friends, whereby if they're saying 1 shilling, 1 share for every 10 shillings dividends in arrears, then how about the 27 million dividends in arrears? So we are able to get that by 27 million, you divide that by 10 shillings. You are able to get 2.7 million shares. At what price? At 1.25 per share. That comes to 3,375,000,000. And that's what we're going to recognize as the compensation to the preference shareholders as far as their dividends in arrears is concerned. We are going to work out that one, should not worry you. So in note number 3, there are 3 things we're going to do. 1, we must recognize the dividends in arrears of 27 million because it had not been recognized. 2, we are going to compensate the preference shareholders with the ordinary shares of 3,375,000. Thirdly, there is a balance because out of 27 million, we have only been able to pay 3,375,000. So there's a balance we are going to write off. We will talk about that one in the next few minutes, friends. Then we talk about note number 4. In note number 4, the balance on the share premium account was to be utilized for the purpose of capital reduction. So it means our share premium account will be written off. We'll debit our share premium account, we credit our capital reduction. We also have number 5, the value of plant and machinery was to be written down to 75 million. You need to remember that our net book value of the plant and machinery was a figure that we must have calculated, where we took the 210 million, we subtract the 62,500, and we were able to get 147,500,000. We are reducing that 147,500 to 75 million. So we are reducing that by how much? We are reducing that by 72,500,000. We are going to debit our capital reduction account. We credit our plant and machinery with the amount we have written off, and that's a cool 72,500,000, friends. Don't forget, we are going to do that in the next few minutes once again. Number 6, the accumulated losses as well as goodwill were to be written off. If accumulated losses are written off, that is obvious. Whether you are told that statement, friends, you will always know. When we are doing reconstruction, one of the items we'll have to write off are the accumulated losses. We are going to debit our capital reduction. We credit our retained earnings with the losses written off. At the same time, we have also been told goodwill was written off. This is an asset, remember. If you're going to reduce an asset or you're going to write off an asset, you'll have to debit the capital reduction account, you credit the asset account. So we are going to debit our capital reduction with the amount of the book value of the goodwill. We credit our goodwill, and our goodwill at that point in time will not be there anymore. So we continue. We have number 6, where we are number 7. After the resolution authorizing the scheme of capital reduction have been passed, 50 million ordinary shares were issued at par for cash payable in full upon application. If we issue shares, friends, you are going to receive cash. We issue these shares at par. And if we issued at par, then it means that we issued it at 1 shillings and 25 cents. We are going to receive cash on application. If you receive cash on issue, you will have to debit the bank account with the cash process, you credit the ordinary share capital. So in this case, how much amount are we expecting? The amount we are expecting, friends, will be the 50 million shares. You multiply by 1.25, we are able to get 62,500,000 as cash proceeds. We are going to debit our bank account with the 62,500,000. We credit our ordinary share capital with the 62,500,000. It was not issued at a premium, but it was issued at par. On that note, nothing else. That as we assume all the transactions were completed on that 1st October 2007. So at that point in time, we'll now go ahead and prepare a capital reduction account. We also prepare a members account. We then will work on the statement of financial position as at 1st November 2007. Now here we go, friends. We start with the capital reduction account. A, capital reduction account. Capital reduction account, capital reduction account. You need not to forget that a capital reduction account can also be referred to as a reconstruction account. Now let's look at this. First and foremost, we go through the notes. Like note number 1 was saying that the par value of the preference share capital was reduced. If that is the case, we are going to debit our preference share capital, we credit our capital reduction account. For the purpose of revision, we may also want to open a preference. It is a 6% cumulative preference share capital account. We may want to open that. You need to remember that there is a balance brought down. And I may be using these figures in thousands. Let me use these figures or summarize these figures in thousands. I summarize these figures in thousands once again. I recognize this in thousands. So I have a balance brought down of, as I can see there, is 150 million. We have 150 million. We are going to reduce these 150 million according to note number 1 by 2.5. So I'll debit my preference share capital account. I'll come and say debit my preference share capital account and credit the capital reduction account. By how much? We are going to have it, that is the number of shares were the 15 million. You multiply by the 10 shillings minus 7.5. That is 10 shillings per value, which was the original per value, but we have reduced it to 7.5. So it means the difference is what we have reduced it by. If you take the 15 million as we must have worked it initially, 15 million, you multiply by 2.5, you are able to see 37,500. So we'll come and talk about the 500,000. I'll debit my preference share capital, I credit the capital reduction account. 6% cumulative preference share capital, and that is 37,500. That's what you need to do. The next item, as far as note number 2 is concerned, we must have reduced the ordinary share capital to 1.25. So by how much? The original par value per share, friends, was 10 shillings. We are reducing it to 1.25. Then simply it means that we are reducing it by 8.75. We also do the same story. We'll debit our preference, our ordinary share capital, we credit our capital reduction account. At the same time, I'll also want to open this just for revision purposes. Ordinary share capital account. I'll open this. This is for revision. However, this can also be referred to as the members account. These are also can refer to as the members account. So we are opening them at the same time. Don't forget that we have a balance brought down. A balance brought down, these figures are in thousands. Don't forget, these figures are in thousands. Our balance brought down is 200 million. This 200 million, remember, we are reducing that 200 million by 8.75 per share. what are we going to do? We are going to come and say capital reduction. The capital reduction, capital reduction, capital reduction. We say we are reducing. There were 20 million shares, you remember? There were 20 million shares. 20 million, let me put it in short, say 20 million shares. I multiply that by 10 shillings minus 1.25. Remember, 10 shillings was the original par value, but 1.25 is the new par value. So we are simply reducing it by 8.75, as we must have said. So what are we having now? 20 million, you multiply that by 8.75. What are we getting? We are getting 175 million. So we'll come and talk about 175 million here. Remember, this is a debit entry. This is a debit entry. The credit entry will be to the capital reduction account. We are now crediting our capital reduction account. We say ordinary share capital, ordinary share capital, ordinary share capital account, and that is 175 million. 175 million. So that's what you need to remember. We have done a debit entry to the owner share capital account. We have credited our capital reduction account with the amount we wrote off.